Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge that eventually led to a move up towards the combined resistance in mid-April this year, the 2012 high at 241.05 and the November 2011 high at 243.40. On the way up, prices punched up through the November 2014 high at 201.35, the 50% Fibonacci lines of the February 22 to January 23 move at 201.70, and the big 2011-2019 move at 198.30. The April 2023 high at 204.90, the October 22 high at 216.25 until peaking just over the November 2011 high at 243.40. The move up happened so quickly I didn't have time to set out topside targets for it when it happened before peaking and headed back down, all the way back down to the combination of the bright red declining neckline of the April to May 2022 reverse head and shoulders pattern, currently at 197.15. Plus the 50% Fibonacci line, the big old 2011 to 2019 move at 198.30. And most importantly, the very slowly rising medium moving average, currently at 200.85, where prices stabilized and turned back upwards. 8 weeks ago, I had a look at the longer term charts here, and this is what I saw, and I quote: the key move there was over the 50% Fibonacci line of the 2011-2019 move at 198.30. This has seemingly validated the action since September 2022 today as a possible double bottom, Adam and Eve type. Thus potential targets for such a pattern topside would be a primary target X1 in the 235 area, with a secondary high to reach target X2 up in the 251.60 area. These are early days, but that is what it's looking like right now. End of quote. Well, prices reached the primary target X1 in the 235 area, exceeded them even. However, target X2 up at the 251.60 area has not been reached for the moment. And for now, I've decided to retire this harder to reach secondary target from my daily chart. This all leads to where we are now, and I have a conundrum. You see, to me, the action since the start of this year looked like an inverted diving board platform with the flat run in, the shoot up and drop, and now the climb out, but inverted. The only issue with this is there is no such pattern. I can't find one that I can actually apply it to. You can have a diving board with a V bottom or a V top, but not with a run up from a fairly flat congestion area, as we've seen earlier this year. This leaves me with nothing other than a V-top pattern, which I feel is only half the story. Anyway, the V-top stroke inverted diving board pattern is over, and prices created over early May a small double bottom pattern. The ambition of this pattern was quite low. A small move only up as far as the 216 area, which we achieved 3 weeks ago. This week I was prompted to draw a bullish Andrews pitchfork for the action since mid-March to early May. At first glance it looked like it fitted well, but the test down today threatened the lower time, and I instead chose to draw in dark blue the shallower bullish shift pitchfork for the same move. From this you can see that how the middle time, currently at 230.60, working initially with the congestions at 220.90, 224.40 to 226.45, 229.15 to 230.10, and the 2012 high at 241.05, all managed to erode the market enough to stop the rising prices. Now, prices had peaked enough, or had dipped enough really, that we are testing the very recent 50% Fibonacci line at 218.65 and threatening to form a double top. London coffee. 14 weeks ago, prices shot up through the late January to early March bear channel, prompted by the then rising short medium moving average, currently at 38.04. The market took its own sweet time, but it did in the end exploit the upside. I said 11 weeks ago, and I quote, "It nevertheless still lays out all sorts of possibilities topside." Thus, if we look at the bear channel as a bullish halfway hesitation, then we will need to have 2 points from where to start measuring it from. The first is the January low at 27.44, and the second is from the mid-December 2023 to sort of start of the rally in the 25.20 area. Thus, for the first pattern, we could have a potential target X in the 34.80 area, whilst from the second origin, you could see up as far as potential target X1 in the 3700 area, well up and off my daily chart. A few days after my commentary, target X at 34.80 was reached, and soon after, the harder reached target X1 in the 3700 area was also achieved. Prices peaked 7 weeks ago and turned lower once again, this time with greater force and adding a changeover gap in early May that has since been filled and dropping down as far as the combined January high at 32.62 and the slowly rising medium moving average, currently 35.19, where they have once again stabilized. Towards the end of May, prices started to rise again with a breakout over the short medium moving average, currently at 38.04, that had been corralled on the upside. It was enough of a break higher that prices last week made a new all-time high in August. Made a new all-time high at 43.94, not in August, but in 43.94. We have since come off a little. All this action has allowed me to draw a bullish pitchfork for the late February to early May action. And unlike New York coffee, it is not the shallower bullish shift pitchfork, no, but a more acute bullish Andrews pitchfork, highlighted in dark blue on this daily chart. The market is at the moment in between the middle time above, currently at 42.97, and the lower time below, currently at 36.92. I suspect this acute bullish Andrews pitchfork is important, and it may hold the key to what is happening. What will be happening next? I tried just for size the bullish shift pitchfork like the one we have in New York coffee, but whilst it fits, it doesn't tell any story, and I think for now, this bullish Andrews pitchfork does tell the story.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.